welcome everyone to this short talk on the budget and its impact on investors, what it means for all of us. The budget, I think, is a very important event for all of us, and the reason we are very concerned about it is because whatever happens in the budget has a very significant impact on the equity markets and debt markets. So obviously, as an asset management firm, we are very concerned about what the new changes would be and how would they impact these markets. The second piece, which is very crucial for us as far as the budget is concerned, is the impact on taxation. Great news here has been that the finance minister has not really touched the taxation, as far as in this budget is concerned. Now, coming back to the impact on the market, obviously there were a lot of expectations on the budget. In fact, the finance minister started out his speech by talking about the debate going for a large amount of spend by the government, slipping on the fiscal deficit that was committed, or sticking to the fiscal discipline the finance minister has indicated in the past as well. We are very happy to note that the government actually decided to go down the path of maintaining the fiscal discipline. That is one single factor which is, I think, very favorable for the market. The reaction of this can easily be judged by how bond yields came off very quickly as soon as the budget was over. So obviously the markets have given a thumbs up as far as the debt markets are concerned. It has built expectations now in the system that the RBI would also take this forward and hopefully cut interest rates. And we all know that India, if we have to continue to our growth story, it is very important to bring down our interest rates in a structural manner. And obviously, if the government is not going to borrow very significantly this year, or is going to maintain to the level of borrowings that it did in the past, and stick to the fiscal discipline, that's a very, very big positive for all of us. We also believe that as you keep the fiscal discipline under check, it has a huge impact on equity markets as well. We all know that in India, whatever profitability growth that we are looking to happen is a lot contingent on what happens on interest rates. There have been a lot of argument in the past that India needs to start softening interest rates because we were the only economy perhaps where interest rates have been fairly high. And today we are talking in an environment where interest rates actually have become negative in large parts of the globe. So Europe, several countries are on negative interest rates. We see the interest rates very low in the US. Japan of late also decided to go in for negative rates. So obviously India with higher interest rates sticks out, and we do believe that anything which drives interest rates down can be very positive for the end investor because it will impact the markets in a very positive manner. So we are very excited about the commitment that the government has done, especially in the rural areas. The reason we are excited about that is that one of the growth pillars for us, we believe this year, is also what happens in rural consumption. So as we address all the stress which rural folks are going through, which has been on account of essentially 2 deficit monsoons, so we do believe that the thrust was in the right areas by supporting the rural economy, because that is an engine of growth, and we need to recognize that as a country, that can also make meaningful contribution to the overall growth of the country. Similarly, I do believe that from a mutual fund perspective, we want markets to be very vibrant. We would ideally like new companies, new innovations, new businesses to come in. So the kind of importance the finance minister has given to startups, I think, is very, very encouraging. Also, the impetus that he's giving to job creation, I think, is a very, very important element. The finance minister captured all these thoughts very beautifully in the 9 pillars that he talked about. And we do believe that the budget is actually a step in the right direction. It will really be very positive for the markets in the medium term. As investors, we need to bet on our own country. We should believe that India's growth story is intact. In fact, we will thrive in a market where the world is struggling, but we stand out as a shining light. That thrust which the finance minister has given to the local economy, to the thrust in rural areas, to social spending, to the thrust in terms of continuity in taxation, will really make a meaningful difference for us during the course of this year. So we believe it was a very constructive budget, and all of us then can now put these thoughts behind us and start really focusing on reinvesting and reaffirming our faith in Indian equity markets and bond markets. So if you look at all our funds, we stay very positive on our equity funds, on our debt funds. We do believe that Indian economy will come back. We do believe that the earnings growth will pick up over due course. We do believe that cleaning the banking system to the extent possible, and also the reforms that have been mentioned, and the fact that there will be recapitalization of the banks, and where the finance minister has indicated that if required, they'll be willing to invest more funds into the banking system, is a great step, because that is where credit growth can pick up and eventually start helping us in the long run. So at this point in time, we should stay focused on our financial goals. As end investors, we must keep in mind that goals can only be met if you were to save regularly, and that eventually translates to large amount of wealth for investors. So staying invested for the longer term is the game, and I do believe that the budget has only reinforced the fact that India will continue to do well, and if India does well, obviously our investments will also do well in that process. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.